only when the cash is received by selling the goods, or when the cash is received from doing the services, giving the services, or from any income. Only then we will record the transactions. Because hello students, welcome back. Now we are here to study the system, that is the basis of accounting. What are the basis of accounting we will be seeing in this topic? There are two bases of accounting. Basis simply means how are the transactions to be recorded. A question. Now we have seen that every transaction has dual effect. The first one is the give and the other one is the take. Now, since we have identified that what are the transactions and which transactions are to be recorded in the business, that is only the monetary transactions have to be recorded in the business transactions. Now, the question arises how to record what type of transactions, as in there are two types of transactions mainly. The first one is the cash transaction. The cash transaction simply means the transaction which involves the inflow or outflow of the cash. Inflow and outflow of the cash. Obviously, you will say every transaction is a cash transaction. No, it isn't. Why it is not? Because when you go to the shop to buy something, you have an option to pay the amount immediately to the shopkeeper, or else you can pay the same amount after a period or so. So these are two types of transaction. One is the cash transaction, the other is the credit transaction. So what type of transactions is to be recorded, we will be studying in this basis of accounting. Okay, so there are two bases of accounting. The first one is the accrual basis, the second one is the cash basis. Now cash basis, with its name, simply means the transaction which involves the immediate cash inflow and outflow, immediate exchange of money. It will be recorded in the cash basis of accounting. Accrual basis is not, doesn't only record the credit transactions but also the cash transactions as well. I repeat once again, I just said that there are two bases of accounting. The first one is the cash basis. With the name, we can see that the cash basis simply records the cash transactions, the immediate cash inflows and the immediate cash outflows. The money exchange, immediate money exchange transactions are to be recorded in the cash basis of accounting. But in the accrual basis, both type of transactions can be recorded. That is, it involves both type of transactions, that is cash as well as credit as well. So now we will see the advantages and disadvantages, how it is to be recorded, what are the items which are to be recorded in the cash and the accrual basis. So the basis of accounting is basically, it is a point of view, the timing of recognition of the revenue and cost. No, the main thing is the timing of recognition. Timing of recognition simply means when is the transaction to be recognized. Now, what is the meaning of this thing? This simply means at what time will you record the transaction. Recognition simply means to record. When do we record the transaction is told by the recognition concept. It simply says the time when you will record, the time when you will recognize the transaction, then only you will be able to record it. So when it is to be recorded, when the cash is paid or not paid, when the cash is received or not received. So as I just told you, there are two main broad approaches to accounting concepts. That is, the first one is the cash basis, the other one is the accrual basis. Cash basis is only records the cash transactions, accrual records both of them. We'll see this. So cash basis entries of in the books of accounts are made when cash is received or paid. Only when the cash is received by selling the goods, or when the cash is received from doing the services, giving the services, or from any income, only then we will record the transactions. Because when we are receiving the cash, the money, only those transactions will be recorded. But when we are not paying the cash, when we are not receiving the cash, we will simply not record the transactions in the cash basis of accounting. Okay, so next, and not when the receipt or payment becomes due. Due simply means, the meaning of due is to be received or to be paid. I will just explain once again. Suppose I have purchased the goods. When I purchase the goods, from say Rohan. Rohan is a person from whom I have purchased the goods. So I am liable to pay him the amount. So I have two options, either to pay Rohan immediately, that the cash will be paid immediately, or else I can pay him the cash after a certain period of time. That is, we can purchase the goods on credit where the amount, where the cash will not be paid immediately, but after some period of time. Okay, so some period of time. Now, this is only written when the actual cash is received or paid. When we pay him the cash immediately, actually, in actual, the cash is being received or paid, then only we will be able to record the transactions, and not when the receipt or payment becomes due. What happens if I have purchased goods from Rohan? Obviously, I will have to pay the cash today or day after tomorrow, whatever it is. Is that clear? So if I'm not paying him the cash, this simply means the transactions are being done on credit basis. The amount is due to be paid to Rohan. So these type of transactions are not to be recorded in the cash basis of accounting. Next, for example, there's an office rent for the month of December. For example, we have used the premises from a landlord. A landlord owns the property from whom we have taken the premises on rent. Every month we pay him the rent. Now, for example, for some month, for a single month, for December, we were not able to pay the cash immediately. We didn't have the cash. We were lack of cash. So we asked him if he can pay the amount in January. Okay. So in the cash basis of accounting, we will not record anything in the December, even though we have received the services of the premises, but then also nothing will be recorded. And in January, we will record both the transactions, that is the rent we paid for the month of December and the rent which we have paid for the month of January. Both will be recorded in the month of January itself. Is that clear? So this is the cash basis, which simply says office rent for the month of December is being paid in the January 2015. So we will record the same in January 2015 only. Now, it is recorded in the books of accounts only in January, not in December, even though we have received the services out of that premises. Okay. Now, similarly, sale of goods on credit. If we have sold the goods on credit in the month of January, it would not be recorded in the January if the amount is paid or the amount is received in the month of April. So it simply says that in the month of January, we sold some of the goods. In January, we sold some of the goods to, suppose, a person named Amit. We have sold the goods to Amit on credit. We have sold on credit. So we will simply not record the transactions in the month of January. But Amit, what did he do? Amit paid the amount in the month of April. So if Amit is paying cash in the month of April, then only we will record the transaction, yes, that we have sold the goods to Amit and from whom we have received the cash. The credit transactions are simply ignored in the cash basis of accounting. Okay, that's why it is not, that is not recommended to be used by any of the business organizations. Let's see it. So this system is basically incompatible. Why is it incompatible? Because if at all Amit didn't pay, or else we forget to receive the cash from Amit, that entry will not be recorded forever, and you will not be able to know to whom you had sold the goods. Are you getting my point? Just imagine you are sitting in the business, you have sold the goods to Amit, and you have not recorded anything in your books. And after a month or so, after 10-15 days, you will forget that you have sold the goods to Amit as well. So that's why it is incompatible, because it is not accurate. Because the expense for the month of January should be recorded in the month of January itself, or else there will be the misappropriation of profits, miscalculation of profits. This is the drawback of the cash basis of accounting. So it is basically the system is incompatible. Matching principle is not complied with. Matching principle simply says the expenses which are done to make the revenue, to earn the income, should be recorded at the time of the making the revenue, that is the expenses. For example, in January, we purchased these goods only from, say, Aman. We have purchased the same goods from Aman, and now we sold these goods to Amit. In the month of January, we paid Aman, suppose say 50,000, and these goods were sold to Amit for rupees 70,000. Now we have earned a profit of 20,000, but we will not record it because we haven't received the cash. So the matching concept principle is misutilized. It is not able to utilize. Why? Because the cash basis only records the transaction when the actual cash is received. So we will record this in the month of April, even though the expenses were made in the January to purchase the goods. Are you getting my point? So that's why this system is incompatible. Now, which states revenue and period matched with the cost of, okay, as we all know that the matching principle simply states the revenue for which period is being earned, the expenses should also concern the same period of time. Both expenses and revenue, both expenses and income should be of the same month, should be of the same period. It should be recorded also for the same period itself. So this lacks the principle of matching. So that's why this accounting is not recommended at all. Okay. So this was the explanation for the single, that is the cash basis of accounting. Next, we see the accrual basis. One more thing in the cash basis, it is simple. Obviously, it is simple. Why is it simple? Because only when you will receive the cash, you have to record it. Only when you are paying the cash, you will have to record it. If you haven't received cash or you have not paid the cash, you simply won't record it. So it is simple. Whenever you get the cash, record. Not receive the cash, not record. Is that clear? So it is simple but inappropriate method. This is inappropriate method. Most organizations calculate profit difference between the receipts and the disbursement of money. Obviously, the goods have been gone at other point, the cash is being received at other point. So this is a mismanagement, mismatching of the transactions which are being recorded in the books of accounts. So that's why it is not recommended. So disbursement of money is done on another period and the goods are being sold in other period. So given period rather happening transactions. So the profit which have been calculated in this type of basis is not correct, because the profit, as we saw that the goods were purchased for 50,000, we paid the cash immediately and these were sold for 70,000. So there was a profit of 20,000 which needs to be recorded in the month of January. But since this 70,000 was not received, we record this after some time. So in the month of January, we had a loss of 50,000 because only the expenses of 50,000 have been recorded in that month. So that's why the inaccuracy, the profits are mismatched, the profits are not able to be calculated on a good, accurately basis. So this was the full explanation for cash basis of accounting. Next, we'll study the accrual basis of accounting. Accrual basis simply records all the transactions, whether it is cash, whether it is credit, because if at all, now we have purchased the goods for 50,000, even though we have paid the cash, we will record it. And we have sold the goods for 70,000, even though the cash is not received, then also we will record the same in order to check the accurate and actual profit. So in this type, we will get to know the actual profit of 20,000 for the month of January, which was not being seen in the month of January in the cash basis. Okay. So now accrual basis, revenues and the costs are recognized when period occur rather than they paid. At the time they occur, in the period which they occur, what the revenues and the cost, that is the incomes and the expenses, whenever they are incurred, whenever they are accrued, it will be recorded, not when the cash is paid. So they simply say the period matters and not the amount when the cash is paid or received. So distinction between the receipt of cash and right to receive cash and payment of cash and legal obligation to pay cash under this method is same. That is, they simply record all the transactions. What happens is, if at all the goods are sold on credit basis, the legal obligation arises as to we will receive the cash even though the cash is not being received in the primary basis. That is, exactly immediately we didn't receive the cash, but in future we will obviously receive the cash because the legal obligation, because the goods have been delivered, the goods have been transferred to this other party, so we will have the cash within us after a time or so. But The cash basis says only when the cash is received, it will only be recorded at that time only. So there's a distinction between receipts of cash and right to receive. Both of them will be recorded. Either the cash is received or right to receive of cash has been made, has been established. Okay. Next is under system monetary effect transaction taken account period they earned rather than period cash. Okay, this is simply the same thing which simply is saying which they are trying to say that the period matters and not the cash inflow and outflow. If at all cash is not coming in or cash is not going out, but the legal obligation has arrived, the goods have been delivered, the goods have been delivered to us or have been delivered to the customers, then also we will be able to record the transactions. Is that okay? So it is period that they are earned will be recorded rather than the actual cash is received or paid by the enterprise. It will not be recorded. So okay, it will be recorded at that time also. So what will happen? We will record 2 times the same transaction. How come? First, we have purchased the goods from, say, Rohan. So we will record we have purchased the goods and Rohan. 2 accounts, 2 ledger accounts. Next, after the payment, we will record that yes, we have paid the cash to Rohan. With this, there will be a nullification. There will not be the double transaction. There will not be the double entry. There will be the nullification. For example, when we purchase the goods, we wrote down that the goods have come from Rohan, but amount has not yet been paid. But when the amount will be paid to Rohan, so the again Rohan will appear and the cash will also appear. With this, there will be a cross cancellation of Rohan and the remaining entry will be the goods and the cash only. With this, we have the record to whom we have sold the goods and from whom we have purchased the goods. Next, apart from that, when the goods are purchased on or else goods are sold to Rohan, but the cash has been received, so we will not mention the name of the person because the name of the person is mentioned only when the cash is not received or else the cash is not paid. Only then we have to remember the name of the other person. If the cash has been paid or the cash has been received, so we are not bothered with the name of that person because we are not at all concerned with that person. We have already received the cash or we have already paid the cash. So that's why when the goods are sold on credit, the goods will appear and Rohan will appear. And when the payment is being done, Rohan will appear and cash will appear. But when the goods have been sold or purchased in cash, it will only be recorded as goods and the cash, but not the name. Is that clear? So there is an entry for every transaction, even though it is cash or else it is a credit. In which system this is done? In the accrual basis of accounting. Next, so it is basically the calculation of profits are appropriate and accurate because every month the period in which the expenses are incurred, the period in which the revenues are incurred, both are recorded at the same time. Okay. Next, so expenses are matched against the revenue earned relating to the expenses which were done to make the revenue, to earn the revenue. So that's how there is a accurate calculation of profit. Next example, the raw materials which were consumed matched against the cost of goods sold. As we already know that we purchased goods of 50,000 and the same month we sold the goods for 70,000. This will be matched and a profit of 20,000 will be clearly visible, which was not visible at a time of cash basis of accounting. So these were the 2 bases of accounting, which simply said that there is a cash and accrual. Cash simply records the cash transaction. Accrual records both the transactions, that is cash and the credit. Now, which one is more good, accurate? Obviously, the accrual because it records all the type of transactions. Okay. I hope this full concept of basis of accounting is very much clear to you. Thank you so much.